What's up, traders? I am Vincent Mokoteli from VinnBoss Signal Factory. This is not a financial advice. It's powerful education for those ready to level up. With the right mindset and real strategy, success is within your reach. Welcome to VinnBoss Signal Factory, where signals meet success. So, traders, with the euro dollar, given the fact that we had a couple of invalidations this week before we had our last win on Friday. Before we explain the spike, we have to go back to start analyzing what truly happened and what we were thinking and how the market has unfolded versus what the original plan was. So without wasting much time, Monday we were expecting enough bullish momentum, but we did not get that. So we jumped in on Tuesday because this was enough momentum for us to think or to take the signal to make the new high from last week. Now, with that being said, this is exactly what happened. We got in, we got invalidated right here. We took a second buy. Since there was lack of momentum to take this out, we put a break even. If you are not following any of these videos, it would be hard for you to recall, but I urge you on weekends, go back to the daily videos and check what we were doing throughout the week versus what the weekly forex forecast videos do. So without wasting much time, after getting the break even from here, we were not interested. We were only waiting for a 1:3 to look for buying opportunities, but still it kept making lower highs and lower lows to the downside. And once this level was reached on Thursday night, everybody was sure that we were structured to the upside, to the downside now on this pair euro dollar. Now, what do we expect going into the market going in on Thursday night? This was only sure proof that this was the sell, but we were waiting for Fed Powell to come out and speak maybe a hawkish momentum, but that's not what truly happened. Instead, what happened was, pay close attention to what I'm about to say to you guys. What happened was the Jackson Hole Symposium on Friday, August 22, 2025. The Federal Reserve Chair Jerome Powell delivered a notably dovish speech, meaning it was not positive for the dollar, but I know you guys are smart enough to understand that, signaling a shift in sentiment. Now, Jerome Powell emphasized rising downside risk to the labor market, decreasing a cautious balance between weakening labor supply and demand. He opened the door to a potential rate cut in September. This is what has led to the market spiking to the upside, and we were very fortunate enough to get in here to take out this high, even though we were already thinking. But as soon as we had the dovish stand of the Fed, we were already knowing that if there's a rate cut coming in on September, this simply means that it's going to be bad for the dollar, and indeed it was bad. The euro started gaining momentum and a couple of other pairs against the dollar. So without wasting time, we are now trying to analyze and go to the second reason why this bullish momentum happened. The first reason was the potential rate cut, the imbalances in the supply and demand, or the weakening in the supply and demand of the labor market. Now, markets interpreted this as a clear dovish pivot. Immediately, as the US Treasury yields fell, stock rallied and the dollar dropped significantly. The dollar index fell around 0.43%, trading down to approximately 98.18, while currencies like euro and the Japanese yen strengthened, which is what we were discussing on the New York session with the real account membership analysis that is private and not in here. So with that being said, in short, Jerome Powell's speech triggered a rapid reassessment of Fed policy, particularly expectations for rate cut, leading to heavily disrupting the dollar strength that was built on during the week, because now this was waves that were leading to the downside on, like, if this was not the present, this structure was in for sure a bearish momentum structure. But also I want you to understand that the fundamentals can blow technicals out of the way. So that's why we have to follow the fundamentals, and we do deal with the fundamentals, especially the ones that have the catalyst of moving the markets. So without wasting further time, this is what was the euro dollar for us. You guys did not get the euro dollar, as already on Friday this was a momentum to the downside. But when we were watching Powell's speech, or with the real account traders community members, we were already expecting a dovish sentiment. But as soon as the news came out that there would be a rate cut in September, a possible rate cut, this was our signal to jump in, and we made some pips. Some people are still in, but I'm out. I was not even sure what was going to happen. It all happened fast. As soon as this happened, we put buy stops, and then boom, to the upside, we took out 1.1730. Now, we will discuss what will happen going into next week on the video that is coming out on Sunday, which is the weekly Forex forecast of VinnBoss Signal Factory. Now, with that being said, this is what caused this. And now, this, number one, the invalidation, number one, and then trying to get in here, break even. If you do not believe that we had a break even, go to the previous videos and see the analysis that we were now offering before. It was on Thursday. Yes, it was on Thursday. Go check Thursday's video about the analysis that that was given on the London session on YouTube. Also, you can check on YouTube. This was a fantastic setup, and then we thought this was already to the downside. So I thought if the Fed had held the rate cut the same, this would not affect the market at all to the downside. Yet this is exactly what happened. He told us that there is a possibility of a rate cut in September, which led to investors selling the dollar and jumping straight to the Japanese yen, to the Swiss franc, to the euro, making them one of the best setups of the weeks. So if you do not understand the fundamentals, guys, trust me, we still have a trading course for you, beginner to pro ultimate course. It covers all the technicals and the fundamentals and the sentiment knowledge about the market. So please make sure that you get that, you register, verify your account, fund your account with at least the minimum of $100, and then after funding the minimum, you can even go higher, like $300 US, $500 US, but the minimum for you to be part of the real account traders community is for you to have the minimum of $100. Then after having the minimum of $100, you can get the course, get trading signals, get covered with the London session and the New York session twice, the update in one day, which makes the market understanding a bit easy for the community. So without wasting much time, let's go over to the pound and the dollar to see exactly what happened with the pound and the dollar. Welcome to VinnBoss Signal Factory, the home of real traders, real strategies, and real profit. Right now, you have a chance to join our exclusive real account traders community absolutely free until September 2025. After that, we will introduce a small monthly fee, but if you join now, you lock in all the benefits without paying a cent. Here's how you can join. Register under our exclusive excellence broker link, verify your account, fund with just $100 to activate your spot. Now, why do you have to join VinnBoss Signal Factory? Daily high probability trade signals backed by deep price action analysis, live market breakdown so you know exactly what is happening and why, real account traders only, no demo hype, just genuine market moves. private traders chat where we share setups, results, and moves before they even hit the charts. Direct mentorship from me, Vincent Mukotedi, to help you level up with your skill fast. Now, why would you choose XNS as your trading broker? It has ultra fast withdrawals, often in minutes, not days, tight spread, and no hidden commission eating into your profit, send account, and high leverage option for flexible trading, regulated broker with over a decade in the market. The clock is ticking. Free access offer ends September 2025. After that, new members will pay to join. Don't wait until the market leaves you behind. Click the link, register, verify your account, and fund your account today. Step into a trading community built for winners. Now, with the pound and the dollar very similar to what the euro dollar was, we gave a signal here on expecting an upside like this. In this one, we're still here. We will share the screenshots with from the VIP group, which is the real account traders community. Now, we had this buy from here on Tuesday. We had been invalidated. It was here or maybe here, and then we had a second entry. We got invalidated the same day. We did try on Thursday again to get in here because all this still meant that there was still an opportunity to go to the upside, but momentum left us with lower lows and lower highs, lower lows, lower highs, lower lows, and all of a sudden the Fed just comes out and tells us that there is a possibility of a rate cut, and also guys, the Australian dollar, US dollar was a fantastic setup also with this one, but it is only covered in our real account traders community, which is completely free. You just have to have $100 to fund and start making money. So without wasting time, today on the lessons and the losses, the lesson of this was the dollar had a deeper correction from last week. The dollar had a deeper correction. It kept on making lower lows, lower high, lower lows, lower high, lower lows, and lower highs, lower lows. And then as soon as the Fed chair came out and then he said that there's a possibility of a rate cut, this was a fantastic setup also. But as you all know that the Australian dollar and the dollar was a fantastic setup also to the upside. It was fantastic, and we are going to await the rate cut or that the Fed has signaled over on this on Friday's press conference. Now, how many losses did we take? It was 1, it was 2, and it was 3. 3 losses, 1 win. That covers everything. Even right now, this is like 1:5. So we are already, if there was 1 loss, 2 loss, 3 loss, and then we are already in 1:5, even though we have not reached this target. That means we have covered 1, 2, 3 out. Those losses are now out or have broken even. Plus, we have 2 extra in profit. So if I'm risking $10 a trade, that means I've lost $30, but $30 is now back. We have $20 more. This is what the power of our strategy signifies into. It also does not also only include our euro and our technical analysis, of course. Excuse me about saying the euro, but it does not include only the technical analysis. It also includes sentiment analysis and fundamental analysis, which are 3 different things, but if we do combine them to the market, they do bring out the clarity of the market understanding, and it cuts out the losses. Together with risk management, we have a different set of risk management rules that we are using here that everybody has to follow. If you do not follow them, you will start to trade with fear. But if you follow them to the tip, you would understand that nothing is working as sweeter as this, so that even if you experience something like 3 losses. You do not even get shaken by that. Also, and remember, I would like to mention that on this video, I'm only covering the euro dollar, the pound dollar, and the euro pound. I'm not interested in analyzing the US dollar, Canadian dollar, the euro Canadian dollar, and the pound Canadian dollar, as in this week they were the best winners in the beginning of the week. We have already done them from Monday and Tuesday. So if you did miss them, please go back to the video, rewatch the video, understand how we did take those setups and why they went exactly as we expected them, and why this did not go exactly as we expected. So going into next week, I'm bullish on the pound and the dollar, but I would like for us to wait for the weekly Forex forecast to understand what is the possibility going into next week, or where to buy, the areas of interest going into next week. So without wasting much of our time, let's go over to the last pair, which is the euro and the pound. Are you tired of guessing in the market? The beginner to pro ultimate course is not just another training. It is a fast track to trading mastery. Whether you are starting fresh or you've been in the game and can't seem to break the wall of inconsistency, this is where everything changes. What makes this course unstoppable? It has 4 different trading strategies that you can try with. Number 1, mastering Fibonacci price action strategy. Here you will learn the exact entry zones the market respects over and over again. Number 2, smart money concept. This will teach you to trade like banks and institutions, not just like retail crowd. Number 3, supply and demand zone. This will help you identify the market turning points before they happen. Wave analysis. This is where you will predict the price movement with precision. But this isn't just theory. When you enroll, you also get, number 1, our trading signal services with high probability trades delivered to you directly. You also get one-on-one mentorship, so you are never left wondering what to do next. Number 3, you get the proven strategy that works in the real market condition and not just in back testing. This is built for new traders hungry to learn and experienced traders hungry for consistency. It's your chance to move from confusion to clarity, from random wins to repeated results. The market will not wait for you. The difference between those who win and those who quit is the decision they make today. Enroll now and step into a world of profitable, confident trading with the tools and strategies and mentorship to back it up. And last but not least is the euro and the pound. And with the euro and the pound, we were expecting from last week to have momentum to the downside, but it was not as expected also. But in here we did not suffer that much. We did on Monday have a trade here. We had one of invalidation. We got stopped out from here. After this, we did put a break even here because this was the euro CPI. The pound CPI came before. After the pound CPI, we had already broken even. This one came up. This was the strength from the euro CPI, even though it did came out as expected, but the pound beat the market expectations. This all goes to sentiment analysis. But if you do not understand why, if the euro didn't beat the market expectation, it came as expected. I will write E here as expected. This is the euro. It came out as expected, but it was stronger than the pound, which beat the market expectations. Let me write B here. So the pound did beat the market expectations. This was supposed to be a fantastic setup to the downside, but in essence, the euro did come out. Let me erase this. But in essence, after this strong momentum to the downside, we did break even. After breaking even, as expecting this to be maybe today or even on Thursday to continue to the downside, the euro coming out as expected was in short what traders were expecting. So with that being said, this became the setup. As you can see, we did discuss this with the real account traders community. This was the level to look for if we could break below, and we also had a sell stop around here with the stop loss right at our weekly break of structure. We were not out. Some people got out because of this level. They thought this level would hold, which they were correct. And without wasting much of our time, again, this was the first loss, break even, and then the second loss, not the third, the second loss. We had 3 trades, 2 losses, 1 break even. This means nothing to us if we are following the strict rules that I've set for every real account trader in our community to follow and use for market risk management. Now, without wasting further time, what did we learn? We learned that from this momentum, the lesson of this pair, from this momentum, we made enough money from this. We made enough money from last week. Now this week we did not make enough money. What does that mean? That means that the market has shifted. The pound is no longer the strongest of the euro, but the euro has become the strongest. That means going into next week, what I would be expecting is to see the euro rallying to the upside more than the pound, as we have already seen even in our euro dollar and pound dollar. The euro dollar has already taken out the structure that was expected for last week. The pound has not yet reached the intended target. Now that's how you weigh them. I did try to specifically choose the currency pairs that would make even newly traders understand the shift in sentiment so that everybody else can be in the market. Now, without wasting much of our time, this was what we are covering on the lessons and losses of the week. I hope I did mention or cover the lessons and the losses. What happened? Why did we lose? And what was the lesson? The lesson in here was the change of structure. The lesson in both euro and the dollar was the fact that now the dollar is expecting a rate cut in September. That is why we had a sharp momentum to the downside, even though during the week we were structured to the downside. So this is what is happening in here. The pound and the euro, we were expecting the pound to continue to the downside, but the euro has gained more momentum even after the fact that more especially for the fact that the Fed chair has just given us the expectation of rate cuts going into the market and the imbalances in the labor market going into next week. So what we should watch next week is especially the labor market. If we do have a very dovish printout on the labor market next week, then it will indeed signal what the Fed was talking about, as this would be a fantastic place for us to sell the dollar going into next week. So that is it from VinnBoss Signal Factory and me. We are now done for the analysis of this week's lessons and losses. I hope you guys had a fundamental mindset of learning and you guys learned a lot from last week. Without wasting much of our time, thanks and happy trading.